World's largest video game retailer, GameStop Core, has had a truly one-up week, and I'm rather cool because that's gaming stock, speak even, for an extra life by the way. That's following the return of the financial analyst Keith Gill, known online as Roaring Kitty, to social media. Now, Keith is largely credited for spiking the GameStop surge in late 2020 and thus creating the first ever meme stock. Now, that's a stock that's made valuable by popular culture rather than traditional yardsticks, such as profits. Did you get all that? I'm still trying to decipher it all. Joining me now is Ed Moyer, who is an independent analyst. Ed, you're going to have to break it down, not just for our viewers, but for me. So what does this mean? How significant is this moment? What's happened?
Yes, and thank you for having me. And right now, it seems that meme stock trading has made a return, and I think a lot of that, as you highlighted, is due to the return of Keith Gill and aka Roaring Kitty. But I think what you have to also understand is U.S. stocks are near record highs. There has been a resurgence in retail interest that has been growing, and for when you take a look at what is a good opportunity. Some people were thinking, well, stocks are at record highs. Well, who are the heavily shorted stocks? And GameStop was one of the ones that drew a lot of attention. Its short interest was around 24%, which is nothing near the levels we saw a few years ago, and that really played a big part into it. And I think what also a lot of traders are focused on is there's a new overhaul with the way trades are going to be settled, and that is going to take place at the end of the month, which should help avoid all these excessive trading halts. So it seems that there's a lot of momentum going into this trade.
I wonder if we could just try and break it down, because for many this may well sound a bit like cryptocurrency. So what is a meme stock, and how does it differ from stock within the company itself? What's the difference?
Well, meme stock, it is a gamble. It's not, you're not seeing shares of these companies trade on true fundamentals. It's just a momentum trade. And this is something that if you take a look at GameStop, for the stock to have the move that it had earlier in the week, I mean, this is a company that barely turned a profit last year. Its outlook is not optimistic at all. It's a brick and mortar store that they're really trying to find a new way to reinvent themselves, and it's the same story year after year. So it's really just a momentum play, which lasts very shortly, and in the end, a lot of people do lose on it.
Okay, so this is good news that Keith Gill has made a return then.
I think it rejuvenated a lot of traders that were dormant. I think for some people, they were still holding on to these positions, so they had the potential to get out of a position that they've been holding for 3 years. But I think overall, it is a fad. It will probably last. It probably won't last as long as it did a few years ago, because the consumer is in a little bit weaker shape. Credit card costs, rates are much higher. The consumer is definitely starting to feel the pinch. Inflation has been weighing on them for quite some time now, and you're probably not going to see as much excess savings go into these meme trades.
Okay. Ed Moyer, independent analyst, thank you very much indeed. I learnt a bit there. Thank you.